Gold's now got support at 2,900. That's basically it. The support level, in case you haven't noticed, keeps on going up for gold. And now it's like 2,900. So if you get a break below 2,900, you're getting a bargain. And soon 3,000 is going to be the support. But gold is no more than 2%, less than 2% from its all-time record high. And Bitcoin is in a bear market, 20% below its record high. I mean, what does that tell you? And also, Bitcoin is lower today priced in gold than it was at its peak in 2021. I talked about that a lot on this podcast, that even though Bitcoin was making nominal new highs in dollars, that it hadn't made a new high in gold. And I said on this podcast, I thought there was a good chance that the high was in, that Bitcoin would never see a new high in terms of gold. Gold was down today, right? Gold was down at one point. It was down like $60. But so what? I mean, I don't even know, it barely got below 2,900. And in fact, it's back above that right now. Big gold is trading at 29.27. It's up about $12 in the evening. It was down about, by the close, maybe $35-40. Gold's now got support at 2,900. That's basically it. The support level, in case you haven't noticed, keeps on going up for gold. And now it's like 2,900. So if you get a break below 2,900, you're getting a bargain. And soon 3,000 is going to be the support. But gold is no more than 2%, less than 2% from its all-time record high. And Bitcoin is in a bear market, 20% below its record high. I mean, what does that tell you? And also, Bitcoin is lower today priced in gold than it was at its peak in 2021. I talked about that a lot on this podcast, that even though Bitcoin was making nominal new highs in dollars, that it hadn't made a new high in gold. And I said on this podcast, I thought there was a good chance that the high was in, that Bitcoin would never see a new high in terms of gold. I think the only reason that that was wrong was because Trump won. Had Trump not won the election, there's no way Bitcoin ever would have seen 100,000, right? So I think that the high would have been in. But even though Trump was elected, and even though we went to 100,000, 109,000, today, Bitcoin is lower by about 10% than it was back in 2021, because Bitcoin is only worth about 30 ounces of gold. When I say only, that's still a big number, right? That's ridiculous that you can even buy 1 ounce, that you could buy anything with a Bitcoin, but you can get 30 ounces of gold. But in November of 2021, you can get 34 ounces. So it's down by 10%. And so Bitcoin is broken back down. It was a false breakout in terms of gold. And again, the only thing I think that really got the hype up there was all the talk about a strategic Bitcoin reserve, which I've said is never going to happen because Trump's not going to enact it on his own. I don't think it's legal. Congress is never going to pass it. It was all just a bunch of hype to get people to buy so the whales could sell, because there's some big selling going on that was able to overcome all of the buying from MicroStrategy. And not just MicroStrategy. There's a handful of other companies that followed that ridiculous playbook of Michael Saylor that also have been buying hundreds of millions or billions of dollars worth of Bitcoin and putting it on their corporate balance sheets. But despite all that, Bitcoin is in a bear market, which means even if they were thinking about a strategic Bitcoin reserve, that's dead. I mean, why would they do it now? This thing's in a bear market. It's free falling. You know, how are you going to buy that? If they actually did it, it would look like a Bitcoin bailout fund more than a strategic reserve. Anyway, we got a quick commercial break. Don't go anywhere. Coming right back. But anyway, you know, gold was down. A lot of people are saying, well, gold was down too. See, it's just like Bitcoin. Yeah, gold is within 2% of its all-time record high. Nothing like Bitcoin. Gold is a buy. You want to buy the dip? That's the dip to buy. Although the real dip to buy were the gold mining stocks, which again, they got hammered this morning. They were down 3.5%, 4%, you know, because gold was down. Why? I mean, even though it was down, it's still 2,900. The stocks are a steal. Now, they rallied back. They still closed down, but maybe about 1.5%. You know, so, you know, they recovered more than half their losses. But that's the dip to buy. I mean, these stocks, again, I am looking for a ballistic move in the gold stocks. I don't know, you know, it could start any day. Well, we had a very interesting day, to say the least, in the financial markets. I don't know if it's the good, the bad, and the ugly. Not sure what good there was, but there were a lot of things to be concerned about. I'm going to start off with the market that rallied. So I guess that's the good if you happen to be long, and that is U.S. Treasuries. We saw a pretty big rally in the long end of the Treasury market today. Now, I don't think this is going to last. I am still bearish the long end of the curve, despite the rally that we've seen today. Part of that was the result of some increased optimism on another rate cut. So the markets are now expecting more rate cuts from the Fed. But what is prompting this optimism about the rate cuts and rally in bonds and drop in bond yield is pessimism on the U.S. economy. And I have been talking about this and forecasting this for quite some time on the program. On my podcast I did on Sunday night, I went over all of the stagflationary data that came out last week. Well, we've already got more of that confirmation stagflation data that came out this week. Yesterday, we got the Dallas Fed Manufacturing Survey, which in January was actually a positive 14.1, and it collapsed to a negative 8.3. That is a big drop. The production index went from 12.2 down to negative 9.1. But the news that came out today, I think, was even more worrisome for the markets, and that was February consumer confidence, which collapsed. They were expecting 103 from an upwardly revised 105.3 in January, making the decline to 98.3 that much bigger. It's the biggest decline in this survey in over 3 years. So a big drop. And the main reason for the loss of confidence is inflation and concerns over rising inflation. In fact, the expectation for 12-month inflation, so over the next year, rose from the prior month 5.2%, which was already a high number, all the way up to 6%. So the public is expecting 6% inflation. Meanwhile, Powell is still claiming that expectations are well anchored at 2%. Whose expectations is he referring to when the surveys are showing that consumer expectations is 3 times as high, 6%? Also, the number of people who are expecting a recession to begin this year rose to now a 9-month high. So people are more concerned about the economy. They're more worried about inflation. Also, Trump is continuing to beat the tariff drum, talking about how, the tariffs with Mexico and Canada, they're still on, right? They're coming in April. Maybe we're going to have tariffs on Europe. So all of this weighing on confidence, weighing on the economy, raising the prospect of recession, which again, I think we've been in a recession the entire time. Oil prices also moving lower. Again, I don't expect this to stay. I think oil is going to reverse, but oil down below $70 a barrel, $69 a barrel. The reason we're seeing this downward pressure on oil, and it's coming even as the US dollar is drifting lower.